Today we're going to cover problem 3-1A on page 137 and 138. So if you notice the beginning of the problem, it said that Tony Masasi started his own consulting firm, the McGee Company, on June 1st, and they have a trial balance, which is similar to what is on the spreadsheet here. And I've included a few extra accounts, and those are going to be the accounts that we actually adjust for the current period. So we'll start off with the journal entries on the next page for the adjustments. And at the top, it also lists, page 138, it lists the additional accounts, which I've listed on the postings, and I've listed only the accounts that need to be adjusted on this particular sheet. So on the postings, they don't have any dates. We'll assume they're all June 30th, so I'll just go in order. So we'll change this here. Okay, so the first transaction, it says supplies on hand on June 30th are $750. So I put two T accounts over here, so we assume that the ending balance is $750. The beginning balance, or what was listed in the trial balance, is $2,000. So how do we get down to $750? We just need to take the difference. So the difference between $2,000 and $750 is $1,250, and that's the credit. And then so we have to have a corresponding debit, so that will be to supplies expense. Okay, so here in the account, we're going to have supplies expense for $1,250 and a credit to supplies also for $1,250. So that is our credit. Again, that's supplies, not supplies. Expense is our credit. So on the postings, if we look at the postings, we will have a credit here for $1,250. So my balance is, again, $750. Okay, and then the supplies expense will have a debit of $1,250, and the balance will be $1,250. And we can carry this over to the trial balance. So the trial balance, we look at supplies, again, which is $2,000. So we have a credit for $1,250, and then my adjusted balance is again $750. And then supplies expense is another account I need to add. And then we have supplies expense. And that's an adjustment for $1,250. Okay. Need to include all of these. Oops. Okay. So now we need to go to the second entry. So entry number 2 says that a utility bill for $150 has not been recorded and will not be paid until next month. But we still have to recognize that we have utility expense. So that's a debit for $150. And since it hasn't been paid, we also need to have an accounts payable for $150. So on to our postings, we have utilities expense, so I need to increase that balance. That's a debit for $150. And then we have a payable for $150. Okay, so I can credit that here. And so now my balance is $46.50. Okay, so on the trial balance, I have utilities expense, which is an adjustment of a debit for $150. And then I have accounts payable, which is a credit of $150. So again, if I add it across, it should be consistent with my balance in the statements. Okay, so my next transaction, number 3, it says insurance policy is for a year. Okay, so meaning that if we look at the trial balance, the prepaid insurance policy that started on June 1st was for $3,000. The trial balance is as of June 30th. So meaning that 1 month worth of insurance expense needs to be recognized. So we want to debit insurance expense and credit prepaid insurance. So again, they started this out for $3,000, and we want to take 1 month, so 1/12 worth of insurance. So just divide by 12. Oops. And so now my insurance for the month is $250. Okay, so that is the amount of insurance that expires. So on my posting, I have insurance expense for $250. That's my balance. That's the debit. And the credit is the prepaid insurance. So now the balance in that account is $27.50. So on my trial balance, my adjustment is for insurance expense of $250. It's a debit. My credit is to prepaid insurance. So my balance is $27.50. So transaction number 4. It says that $2,800 of unearned service revenue has been earned at the end of the month. So unearned revenue had been previously credited. So we're going to debit that. And then service revenue has now been earned. So that's a credit for $2,800. So if I post that to my accounts, we have service revenue that is credited for $2,800, and then we have unearned revenue, which is debited for $2,800, leaving me with a balance of $1,200. Okay, so on the trial balance, we have unearned revenue. There's a debit for the adjustment. Oops. So again, that's a credit balance, but we want to change that. We have $4,000 minus the debit, so it's $1,200, and then we have revenue, which is credited for another $2,800. Okay, so that will equal $7,900 plus $2,800. Okay. Now for transaction number 5, change the format again. So for transaction number 5, it says salaries of $1,900 are accrued, meaning that we have to expense that for wages expense. We haven't paid it, so we debit wages expense and credit wages payable for $1,900. So on the posting, we have wages payable. $1,900 is our balance. And then wages expense increases i.e. debit for $1,900. So my total wages expense is now $5,900. So wages expense increases, and debit $1,900. Wages payable again increases to $1,900. We just add across. For $5,900. Now for number 6, it says that the equipment has a 5-year life with no salvage value. It is being depreciated $250 a month for 60 months. So we have depreciation expense, $250 because it's 1 month that goes by, and we credit accumulated depreciation for $250. So if we post that, we have depreciation expense as a debit, and that's the new balance. Then accumulated depreciation is the opposite, is a credit for $250. If we post that on the trial balance, we have accumulated depreciation, which is a credit, and that adds across. And then depreciation expense is a debit for $250. And we add that across. Okay. And the last transaction, number 7, says the invoices representing $1,200 of service performed during the month have not been recorded as of June 30th. So that means that revenue has been generated, customer has not been billed, so we have an accounts receivable, and we have service revenue. So that's for, again, $1,200. So we debit accounts receivable, credit service revenue. Put that on the posting. So accounts receivable is a debit. So that increases by $1,200. So my new balance is $7,200. And then correspondingly, service revenue has another credit for $1,200. So we increase that balance by $1,200. So I go to my trial balance. So accounts receivable increases by $1,200, and the new debit adjusted balance is $7,200, and then wages, not wages, service revenue increases. So I had $2,800. I'm going to add the $1,200. Okay. So now we have an increase across the board for my last transaction. Now all I need to do now is add all the other balances across to make sure everything is the same. So we did cash, now equipment, okay, accumulated depreciation, wages payable, accounts payable has been added, unearned revenue has been adjusted, owner's capital has not, so we add across there. Revenue has been taken care of, wages expense, rent expense needs to be added, as well as insurance expense and utilities expense and supplies expense. Okay, so now my adjusted balances are equal across the board. My adjustments are $7,800, debits and credits, and so those are equal. So that completes problem 3-1A.